Well, welcome to Qodeo's webinar today at Boston University. I'm Simon Glass. I'm about to take my mask off to do the presentation. I'm up here in Boston today with BU. I'm delighted that Qodeo has been able to work with Boston University on a research project called, which was entitled a report out of which come searching for horses, not unicorns, Greater Boston's VCP trends. My name is Simon Glass. I'm the CEO and co-founder of Qodeo. And what we do is match venture capital and private equity firms, principally with entrepreneurs around the world using our platform, which leverages our proprietary algorithms and data that we collect. I'm going to switch hopefully to a presentation shortly. There are a few logistical changes on the way we've had to work today with panelists in multiple places. The presentations will run for a period of time, then we're going to have a panel and then some Q&A opportunities for attendees subsequently. So welcome to today's webinar with Qodeo and BU. So, just need to get the, here we go. Just one moment, please. Okay, is that working? Okay, so thanks very much, as I say, for joining us today. We're going to be running through a brief presentation about Qodeo today, and then we're going to hand to the BU team do a presentation, and then from there, then we'll have a Q&A and panel afterwards. So, as you see on the screen there, we're delighted to work with Boston University, the Questrom School of Business at BU, and Build Lab, the entrepreneurial lab at BU. Qodeo matches venture capital, private equity firms and entrepreneurs globally through our platform. And to achieve what we do, as well as having proprietary algorithms, we need to have high quality data and high quality participants on the platform. And we so far have over 1,800 VC and PE firms and over 15,000 entrepreneurs around the world of all stages and sizes interacting with those groups globally. And today we're going to do a panel talk about Boston, but obviously hopefully that's relevant to our attendees today. We have attendees today from UK, from Malta, from Italy, from Singapore, Australia, and across the US and other locations. I'd like to welcome everybody today to or the attendees today. And I think a couple of members of the House of Lords even UK, so I want to welcome them as well today onto our call.
Simon, let's make this one full screen as well, because it's sharing your desktop.
So how do we do that? Sorry. We do that. So 1 second here, sorry.
Just make this one full screen. I don't know how to do it on Mac. Yeah.
There we go. There we go. Okay. Thanks. So a few little technical glitches here today, but hopefully we're running okay here. Thank you. So just running through this presentation today. So today's format is, as you can see, searching for horses, not unicorns. Very delighted today to welcome a number of presenters today. We have myself today, the CEO and founder of Qodeo, Simon Glass. We've got two MBA students from BU, from the Questrom School of Business, who went out and interviewed a whole range of leading VC and PE firms and some other folks in the Boston market to get some key current insights into what's going on. I'm delighted to have, that's David Landesman, who's here with me today from social distance to the side here, and Malav. We also have Greg Stoller, a professor, senior lecturer from BU, join us today, who'll be our panelist. And we have two illustrious VCs from the Boston area today. We have Caleb Winder, I hope I'm pronouncing that correctly. Caleb is effectively a health tech VC in the Boston area. he told me just beforehand he's delighted to announce that one of his portfolio companies has just become a unicorn, which is a fantastic result. He went to Babson here in Boston to do his MBA, and is really focused these days on new venture opportunities with a Memorial Care Innovation Fund. And he'll probably tell us more about that and what he sees in the healthcare space. Obviously, a major day today, being British, it's the day that the British government today announced that use of the COVID vaccine is been approved in the UK and will go ahead now. So very heady times in healthcare right now. Our other venture capitalist who will be speaking on the panel later on is Charley Lax. Charley is a co-founder, effectively, of the SoftBank group of venture capital firms. Quite extraordinary meteoric rise that firm has had, and currently is the managing general partner of Graham Banks Capital, which is a VC based here in Boston that invests principally across software, SaaS, and other related businesses. He's a grad and alum of BU, so I'm sure he's going to be able to tell us some more about that shortly as well. And then we're delighted to have Rich Hesp join us. Rich is British originally, but doesn't sound anything like it at all. Maybe it does to Bostonians. And Rich is a partner of Gunderson Dettmer, which is a US law firm focusing on venture-related transactions. So when we get the panel session, Greg will be hosting that, and then we'll have all the attendees available to answer questions. There's a Q&A process that will be curated during the process. I also want to thank, as well as everybody who's on the panel today, I'd also like to thank all the VC&P firms who participate in this program, and you'll see who some of those are shortly. And so we have about 1,800 VC&P firms on our platform on Qodeo, and out of those we've interviewed in person, this year on Zoom, but usually in person in their offices, about 1,000 leading venture capitalists in the world, which is probably about at least a fifth of the firms out there that are pioneering in the VC and private equity space. A huge market coverage through relationships that we have with 30 leading business schools, including BU. So we'll hear more about that shortly. I want to thank also, before we move on, our Qodeo team, both our CTO Ian Sloan and Monica Majewska, who is in our London office helping to coordinate behind the scenes for today and to help put this together. So you can see the format there. We'll have I'll talk about Qodeo briefly, then we'll have the BU presentation, and then we'll have a panel discussion. So many of you may have heard of Qodeo, some of you may not have. As I mentioned, we are a platform, an online platform. And in this era of COVID, it's incredibly relevant to match VC and PE firms with investors, helping both, I suppose, increase the capture of opportunities for venture capitalists and private equity firms, and yet also filter those in so doing to allow them to see a graded series of matches coming through a portal that we provide. And that's enabled by a combination of the algorithms we have built over a period of time, and also proprietary data that come through projects like the ones with BU. One of the top VCs in the Boston area, who's the vice chairman of a major venture firm, coined in November to be the term that Qodeo is noise cancellation for the venture capital community. What he meant by that is that there's a huge amount of deal flow out there, and both the VC and PE firms on the one side and entrepreneurs on the other side really want to get on and run their businesses rather than focus on trying to manage the fundraising and deployment process so much. And we are an incredibly valuable tool to be able to both broaden the net to those of diverse and regional communities, particularly at the moment. A lot of people can't go to networking events in the COVID era. A lot of people aren't lucky enough to have gone to places like BU and yet have fantastic business, whether they be a printing business in Malta or a chemicals business in Malaysia or a tech business in Boston. Many of those folks don't have the opportunity to know the VCs who could back them. And in an agnostic way, Qodeo can automatically put those parties together, a bit like dating. And obviously, we don't do the consummation of the relationship subsequently, like on a dating app. Tinder doesn't follow you afterwards, but we do put folks together. But we do try and do it so that the match is made between the entrepreneurs and the venture and private equity investors on the other side are good quality, best fit matches. Apparently, the average venture to entrepreneur relationship lasts longer than the average British marriage lasts. So we're hoping that we kind of a divorce in venture. So we're hoping that we're not only helping you identify best matches but for both parties, and let you get on, run your own businesses, but also those are going to last. And Qodeo really believes that, unlike a lot of the sort of data providers out there who try to provide information to the space, that really it's up to you to go and run your business, and it's up to us to do the driving. It's a bit like if you buy a car. In Britain, we say most people aren't petrol heads. The 10% of people look underneath the hood of a smart car like a Tesla. Most people just want that Tesla to drive them somewhere. Whereas 10% of people want to look at the bit underneath the hood, i.e. the technology or the data that in our world that we might work with. Most people want the drive, and what Qodeo does effectively is give you the drive. So what we see is that at the moment, all you tend to see in data terms is what's publicly available, what in Qodeo we call the tip of the data iceberg. It's a bit like the Titanic. You're sailing along trying to make investment decisions, trying to deploy funds, trying to identify who might fund you. And yet what you see is historic reported partial data, which by its nature, A, is hard to understand, B, is often expensive to access, and is not the real story. As to what's going on. And then you don't have the tools to interpret that, to understand how to create those matches. We've gone about this in a very different kind of way, both by creating algorithms which understand and pick up both qualitative, soft, and quantitative, i.e. hard factors that work through a mix of algorithms that are nuanced to make sure you get the right matches. But also we pick up interesting data, which you can only pick up by having teams, bright minds, like the folks from BU, you'll hear from shortly, go and interview and profile, understand what makes those VCs tick by meeting them in person. We have what we call our magic source, with source spelled S-O as opposed to S-A. And there are four forms of data that feed into the Qodeo matching engine. There is interview-driven data, and so we've interviewed over 1,000 leading venture capital firms around the world, from India to Tel Aviv, to Berlin, to Paris, to London, to across the US. Spain, Malta, Italy, all kind of places. And we do that in conjunction with 30 leading business schools. So we work a lot with Cambridge University, INSEAD, with IMD, and most recently with BU very successfully here in the Boston area. And we add to that, into that mix, data that comes from the users themselves, from our subscribers themselves, from partner feeds, and from other profiles being built by the users themselves. So that goes into the Qodeo matching engine, and it's a subscription-based service. You can see in the background here, it's from only $9.95 a month, and you'll hear in a minute there's a special offer to you. But we're a subscription-based service, very clean, very simple fee-based system for to actually use subscribe to Qodeo, which is qodeo.com in case you haven't seen to date. So I've got a couple of announcements I want to make today, if that's okay, please, before I hand over to the BU team. And you'd probably rather hear from them than from me. Bright young minds, but I've got two announcements to make today. One of which is that Qodeo is coming to America. Rich, you'll see later, is helping us move our headquarters to the US over the next few months. So we've had a lot of demand for the Qodeo service in the US. Between 60 and 80% of our site traffic has been originating across the US. And we've decided for commercial reasons and fundraising for our own business to be based in the US. So in the process of doing what's called a US flip. So Qodeo, which is currently a UK company with a global reach, will become a US company with a London subsidiary office and a global reach from there. So I'm in America this week working on that, as well as working with research partners. That's the first thing I'd like to let you all know about, and we'll be obviously closer to you. So once COVID abates next year, we'll be able to get closer to our customers in the US. The second part of that is to announce that we also have soft released this week Concierge. So we have a subscription service. You can see the sort of tariff there. So we have a free service which gives you, as a subscriber, as an entrepreneur, gives you some access to our database, do 3 searches, and to be listed on the Qodeo system for VCs to find you. We have Pro. Pro is from $9.95, and in various countries around the world, similar pricing, which allows you to make contact, what we call warm or hot matched leads. Those are leads that have been filtered through our system to be most likely to want to be able to invest into your business. And various other functionality you have as Pro. And today we've released Concierge. That's meeting demand effectively from our entrepreneur subscribers who've said, I want to be even more matchable. How do I improve my profile? And it's the first bit of Qodeo's assistance beyond simply doing matching to provide some education, which groups like BU can obviously help with it by providing reports like we have today. But so Concierge includes access to 23 reports that have been done by similar business school teams around the world on various markets. So it helps you as an entrepreneur or a VC or an advisor be better equipped to understand what's going on in that market. We also, meeting a demand from our entrepreneur subscribers, will do a personal review of your profile to see why you could, or how you could match better using the Qodeo platform. And what's quite often the case is entrepreneurs have great businesses, but they're not experts in fundraising. That's not what they're meant to be doing. As I said before, you're meant to be running your business rather than spending too much time on fundraising. And what we can do is look at your profile and see how with accurate data you can improve your profile within Qodeo with the concierge product to become even more matchable and to get more warm and hot matches. That releases today. Next year, we're going to automate some of that, but at the moment, one of our Qodeo experts will review your profile. So concierge goes live this week, and we obviously wish you to subscribe to that. The second thing I'd like to say today is any participants today on the call in, entrepreneur participants, can have 2 months free. So usually it's $9.95 for Pro or $19.95 for concierge now. You can have 2 months free, that's $20 or $40 worth of subscriptions for free if you use the Part 2 coupon at the point when you go through checkout on our engine. So it takes about only 5 or 6 minutes to put in your profile into Qodeo, which is a very quick, simple, non-confrontational process as an entrepreneur or a VC. And as an entrepreneur, when you go through there, at the point of the payment gateway, you put in that coupon that time to get 2 months free. Any BU staff, students or alumni can also contact Qodeo to get further discounts because the business schools we work with have additional benefits. And everybody who's attended this event today will get a free copy of the report, which goes alongside the presentation that Malav and David are going to present to you. So I'm very pleased to say I'm about to hand over to David and Malav. We're in a couple of different locations, so it's going to be a little complicated today, but hopefully this will work relatively smoothly. So I'm going to move sideways, and David is going to take over from here. And then when we get to their presentation, then Greg will come back in and we'll then hopefully do the panel discussion of what they've seen in the marketplace. So thank you very much so far, and we'll take it from there. So,
Can you maximize your screen? I think it'd be a lot easier for everybody to be able to see it.
okay, so
So maybe there, will that help?
this one, I think if we're just going to switch towards the panelists themselves, perhaps. Do you want to present to the panel, to the slides, or?
Yeah, but like, I think they can see this part and this part.
David, try the little blue icon in the top middle. That should give you full screen access. Please.
We have, and we still have the same. So
This guy maybe?
There you go, right there.
it's still doing the same. So we'll carry on from here, I'm afraid. It's quite hard in these current circumstances to manage this stuff. So
Try going into read mode.
This one?
Yep.
There we go. That's
There you go.
Thank you.
Excellent.
I'll take it away.
All right, thank you very much. So yeah, thank you, Simon, for the warm welcome. My name is David Landesman. I'm going to be talking to you a little bit about our report. So we'd first like to thank the Build Lab, Simon, of course, the Innovate BU Build Lab, all of our panelists, our interviewees, and of course, Professor Stoller here at Boston University Questrom School of Business. We're very happy that BU was the first school in New England that Qodeo partnered with for this collaboration. And yeah, so again, my name is David Landesman. I'm a current professional evening MBA student at Questrom School of Business. I'm in the health sector management program, and I've previously founded 2 companies. Malav?
Yeah, and hi, hello everyone. I'm Malav Sukhadia. I'm a full-time dual degree MBA and MS in digital technology student at Questrom School of Business. And over my course, I got the opportunity to work at a VC firm in Austin. I'm representing BU at a global venture capital competition. And I'm also interning with the Build Lab, that is BU's entrepreneurship and innovation initiative. I'm passionate about entrepreneurship and venture capital. Back to you, David.
Excellent, thank you, Malav. Alrighty, so here's a little bit of an overview of the different people we spoke with. So we interviewed over 30 participants, and we made a conscious effort to have a 360-degree view of the startup and investment scene in the greater Boston area. People we spoke to included venture capitalists, private equity firms, angel investors, academics, consultants, LPs, as well as lawyers. So here's some of the people we spoke to, and again, not just Boston, the greater Boston area. Alrighty. Why is this not going? There we go. All right. So I did my undergraduate in Boston, as well as my graduate studies now too. So here's some information about the city. I love the city, but again, it's not perfect. So I'm going to discuss some of the pros and cons as we continue. So Boston is home to over 50 accelerators and incubators in the area, as well as 35 world-leading colleges and universities. And while school is in session, 20% of the population is actually made up of students. So all of these factors together has really made the ecosystem very friendly for VCs. And some of our interviewees have mentioned that it's made it very easy to work with them and to have a great pipeline, as well as mentoring them. So we've extracted some quotes from our report and from our interviews throughout the slides. So I'll give you a second to read that one as we begin. Alrighty. So Greater Boston is perceived and known to be a great hub of biotech and pharma. So I'm gonna just read this quote. Healthcare is stunningly fragmented. So what does that mean? So there are over 1,000 excellent biotech and pharmaceutical companies in the area, as well as 20 excellent hospitals. So again, this has given Boston its excellent reputation in the life sciences as a world leader. So because there are so many of these companies, investors have become very highly specialized in how they invest. And this has resulted in, again, a fragmentation in not just the founding market, but the investing market too. So regarding some of the main trends in the life sciences industry, what we've heard is that biotech and pharma has been a very hot sector recently because acquisitions are happening a little bit earlier by these large pharmaceutical giants, and medical devices are kind of cooling in popularity because they're tending to be acquired a little bit later. And this, our interviewees have said, is due to acquisitions happening a little bit later in the cycle, often now after clinical trials are over, which makes it a little bit less attractive for some. However, that's the opposite with pharmaceutical and biotech. So again, that's the life sciences and biopharma investors. But again, this space is much broader than that. And there are VC firms that invest in other things. And those VC firms that don't invest in biotech and pharma tend to focus on tech. And as you can see here by the top firms, top sectors present, a lot of them include SaaS, health IT, B2C, and clean tech. Clean tech in particular is interesting because from our interviews, the clean tech ecosystem in Boston is very strong and very tight knit, and it's its own industry. While in other areas, such as the West Coast, it kind of falls under tech. So it's kind of a unique situation here in Boston. All right, moving on. So Greater Boston is a conservative ecosystem. So I'm gonna talk a little about the history and then the present of the ecosystem. So what do I mean by that? So some of the earliest VCs, modern VCs, actually began in Boston. And the picture you see here is the Baker Library at Harvard Business School, where Gregory's, sorry, I forgot his name, was a professor, is now a professor at HBS, and was one of the founders of one of the first modern VCs. So in the beginning, the Boston ecosystem tended to have pretty harsh terms and was very conservative. And again, what I mean by that is they tended to protect their investments as opposed to allow room for growth. So our interviewees described how early terms were very harsh, and they often included full ratchets as well as taking very high levels of equity from founders on the term sheets. So this resulted in this ecosystem being a little bit unpopular for some founders, and some early founders even left their companies after they were reduced to such low equity stakes after multiple rounds. So what happened is Boston then looked at the West Coast, which is having success being a little bit more generous with their terms. And the Boston investing ecosystem then pivoted and loosened up their terms and became a little more gracious in allowing for more equity for founders, as well as diminishing some of the harsher terms. This resulted in more success in the Boston ecosystem. Right now in the present, it still remains with some of its conservative values. As a little bit of an echo, for example, we've heard that the Boston ecosystem is considered very professional and businesslike, as opposed to the West Coast's more relaxed and optimistic attitude. One of our interviewees mentioned how in the West Coast, they're searching for unicorns and don't bother them with horses. It's a little bit different here in Boston, where they're searching for horses, not unicorns, which again is the title of our presentation. And so what that means is, on the West Coast, while they will likely kill off any companies except for their mega winners and tend to want to make their portfolio with one company, in Boston it's a little bit different. They tend to keep around their moderately successful companies and tend to use more than one company to make their portfolio return their investment. And this can be very beneficial for founders and entrepreneurs because it allows them to stay alive and have chance of success. All right, moving on. So now now that I've spoken a little bit about the past and the present, I'm going to send this over to Malav.
Thank you, David, for that overview of the ecosystem's past and present. So moving on to the future, we asked the investors for the hot sector predictions. And as we can see from the first two bars on this chart, AI and health IT, they got the most number of mentions from the interviews from our investors interviewed, followed by machine learning and work from home platforms. So moreover, these investors who are rightly at the forefront of all innovations have predicted increasing investment activities in all the sectors mentioned on this chart in the medium to long term. Next slide, David.
Sure. Sorry.
Yeah, so continuing on the investment, the theme of investment activity, this slide here shows the key investment criteria that angels, VCs, and PEs look for in a deal. If you look at the left bottom pie chart, we see that 62.5% of the angels interviewed made investment decisions based on the startup's team. That is almost twice as much as the angels who invested based on the market and business models. The quality of the team is also an important deciding factor for VCs as well. We can see that 30% of the VCs interviewed rated the startup's team as the most important decision factor in a deal, followed by markets and then the disruptive potential of the technology. The investors usually favored repeat entrepreneurs and cross-functional founding teams. On the contrary, if you look at the right bottom chart, 40% of the PE firms interviewed relied on financials to make an investment decisions, and then around 17% weighed growth or turnaround potential as a deciding factor, which makes sense because PE firms usually go after later stage deals. Next slide, David. Yeah, and even the location of the target deal is an important factor for a deal, and more prominently for angels and VCs who prefer to invest locally, whereas the PE firms interviewed were more or less geographically agnostic. So while those were the attributes that VCs look for in a deal, here we have a few statistics on the quantum for those deals. The VC firms interviewed closed a median of 5 deals per 475 over a period of 12 months, which translates to about 1% deal closing rate per firm. All the firms interviewed indicated that in the greater Boston ecosystem, there's always plenty on the supply side of the deal flow, but the challenge lies in filtering those quality deals from the inbound. 70% of the investors said that they prefer deals sourced from trusted networks with a warm introduction. Now, if you see the pie chart below, the closed VC deals, from the closed VC deals, around 44% were early stage deals and around 16% were seed deals. On that note, a few angels interviewed mentioned that there is a growing funding gap between pre-seed and Series A in the greater Boston region. And to fulfill that need gap, more and more VCs have started to write smaller ticket size checks, which has resulted in greater friction of VCs among the thriving angel groups of Boston. Moving on. Yeah, so speaking of friction and like switching gears a bit, our report would have been incomplete without looking at the impact of the current pandemic that we're living in on venture capital. So in the next couple of slides, David and I will present a few insights we got from the investors on the impact of COVID-19 on their firms as well as venture capital in general. To our surprise, 75% of the firms interviewed said that compared with the summer of 2019, the inbound deal flow during the pandemic disrupted summer 2020 remained more or less the same. While the inbound deal flow was not impacted, most interviewees confirmed that deal closing or making deals was significantly impacted. VCs were rather skeptical about investing in startups with less than 18 months of runway. Valuations also took a significant hit as startups had to revise their projections. Later stage and larger firms saw more write-downs. Exits were not spared as well. They were tremendously impacted in the first 3 quarters of the year. But the VCs we interviewed rightly predicted that we will see a rise in exit activities in Q4 of 2020. While the IPO market slowed down considerably, there was a clear winner in SPACs as exit vehicles. These special purpose acquisition companies gained popularity among the PE VC firms, especially for portfolio companies that were under stress due to the pandemic. The experts interviewed foresee that more and more startups will choose the reverse merger route instead of the IPO route to go public, because SPACs provide the added advantages of the ease to market as well as reduced price liquidity volatility. The overall consensus was that while the COVID-19 pandemic has impacted the world tremendously, to say the least, but the venture capital industry has waded and grown through the pandemic, so much so that this event might just be a blip on the venture's timeline. Now, shifting from that bird's eye view of the pandemic on venture capital, we also looked at how the industry was impacted operationally in terms of remote and virtual pitch meetings. Ironically, while it is the VC-backed startups that have improved our virtual interactions, many of the investors we interviewed were kind of hesitant and reluctant about investing in early stage founders without an in-person meeting. Investors usually prefer to gauge the startup team's passion, which is difficult in a virtual setting, and the founders are also getting less attention in a virtual pitch. On the flip side, few angels indicated that virtual meetings have in fact accelerated the pitch to money process, as they can now have multiple meetings with the founders and they can even save time in terms of travel. In conclusion, it is inconclusive whether the virtual pitch meetings is the better side of this coin. Now I'll pass it back on to David to talk about a unique positive outcome of the pandemic.
Thank you, Malav. All right, so, okay. All right, so telehealth. So let's speak a little about telehealth now. Telehealth has really exploded in popularity during this pandemic. And one second, let's make sure. All righty. So as we know, telehealth has again exploded in popularity recently during the pandemic. And I'm going to talk a little bit about where it is now and where it's going. So right now, from what we've heard from our interviewees, it's currently a little bit financially overvalued, and where a lot of the companies have their valuations too high in due to, among other reasons, their projections for future growth continuing to increase at unsustainable rates, such as the rates that they're having now, when everyone's basically forced to use them. And our interviewees have said that after the pandemic, when everything goes back to normal and when people can use regular in-person visits, the valuations will dip a little bit. Our interviews further said that over time, we'll see a rise in these valuations and interest in telehealth again. However, to what extent is a little bit divided among our interviewees. Some were very confident that people would love this as an opportunity. Others said that this is basically all hype and a lot of it's being used because they have to. So now a little bit about the future of telehealth. So right now, telehealth is built from insurance companies to providers and physicians at the same rate as regular in-person visits. This is projected to decrease by about 25% for reimbursements as insurance companies begin to see that physicians and providers don't require to maintain the brick and mortar shops, as well as the support administrative staff. So we're going to see that happening a little bit. We're also going to see in the future, according to our interviewees, an integration of the Internet of Things and other technologies such as Fitbits in telehealth to provide a better holistic approach to patients. Furthermore, the telehealth market is predicted to be very fractured and not just a few companies forming an oligopoly. This fractured market is going to be likely due to a lot of different niche diseases having their own telehealth platform. All right. Moving on a little bit, time will tell, and as this pandemic ends, where it will go. Oops. All righty. Love.
Yeah, so something that came up consistently during our interviews while discussing the pandemic, or as we call it, the global great lockdown crisis, was that startups that pulled through the global financial crisis of 08-09 often bore the best returns. Taking a step back, we asked the interviewees the similarities and differences between the GLC and the GFC. The consensus was that there were a few similarities and far more differences. The GFC hit across the board, while GLC tended to affect specific sectors, usually the consumer-facing ones, such as travel, leisure, and retail. The GFC caused a severe liquidity crunch, halting VC investment activity, whereas during the GLC, the VCs right now are flush with capital and they're looking for opportunities to invest. While both the crises required bailouts, the recipients were different. Financial institutions were bailed out in the GFC, thus safeguarding the LP's capital, whereas in the GLC, the relief packages are aimed at keeping the small businesses afloat, with many even VC-backed companies and startups benefiting from the policies such as the Paycheck Protection Program. An acclaimed academic that we interviewed interestingly observed a general similarity between the two crises. He pointed out that historically, during an economic downturn, when it's supposed to be a buyer's market, fund managers tend to focus more on reshaping and refueling their existing portfolios rather than making new investments, exhibiting that it's really difficult to be greedy when everyone is fearful. In conclusion, the great lockdown crisis has been less detrimental to the venture capital industry in comparison to the global financial crisis of 08-09. And now with that, David will talk about a topic that has rightly caught the world's eye this year.
All right. Thank you, Malav. Alrighty, so I'm going to speak a little bit about diversity. Again, this has been a very tough year for everyone, but it has rightly shown a spotlight on the issue of diversity in this country and around the world. So this is just a sample of what we learned in diversity. We can do a whole talk and presentation on the subject. So what our interviewees spoke to us about is how universities in this area have been a really strong driving force for diversity. And right now, all the interviewees we spoke to and all the entrepreneurs that we spoke to, they all agreed that diversity is an issue that needs to be tackled. And diversity on both the founder and investor front. And we've seen on the investor front, there's LPs in particular have been pushing for more racial diversity in their investments. So this is likely due to the fact that LPs want their investments and the founders that they invest in to reflect the investees that make up these LPs. Additionally, we've seen that there's been an increase of people of color and women-specific funds, and these have really shown the way that investing in diverse founders can have just as good, if not better, outcomes for investments. Additionally, we've seen that everyone has spoken to us about how this is more of a Rolodex issue as opposed to a deal pipeline issue. So what I mean by that is that it's more of an issue where a lot of these diverse founders and even investors don't really have the proper network or mentoring in order to get funding or get positions of investment places. As opposed to the other argument, which we didn't really hear from, which was that it's a pipeline issue, in which would argue that there's a lack of quality for these positions. And again, I'm going to pass this back to Malav, but this is a large topic that I don't have a lot of time for right now.
Thank you, David. Finally, David and I would like to acknowledge all the VCs, angels, founders, everyone involved in the Boston's startup ecosystem whose grit and perseverance have made Boston one of the world's most innovative ecosystems. And finally, we would also like to thank the esteemed panelists, all our interviewees, Simon and the team at Qodeo, the Bid Lab for this unique opportunity. And last by no means, Professor Greg Stoller, without whose guidance and support, this would have never been possible. Thank you. And with that, I'll turn this back to Simon.
Hi. So, like when President-elect Biden spoke the other day, in between various people, we had to wipe the screen down and everything else. So we had the podium down. So as David was just speaking, I just have to briefly wipe my controls down here before we then carry on, if that's right. I have told people, by the way, that I worked in Washington back in 1987. And when Joe Biden first ran for president, both he and I had our own real hair. But I'm jealous of David, as you can see. So I want to hand over to Greg in a second and thank him very much and his students for doing this fantastic job. The insights you've seen in these slides today are a synthesis of what's in their report. Qodeo produces reports on each individual market that we work with a business school in or on. And I have to say the BU report that's been done on the Boston market is one of our best. We're very proud of it. And it wouldn't have been possible without the fantastic support from BU, the Questrom School of Business, from the students, from the participants in the project as mentioned, and particularly Malav and David, who've done a fantastic job. And I really want to thank them at that stage. The insights they have found help drive our system to create these matches. And you can see a lot of subtle insights and current insights into the local market. I'm going to hand to Greg, if that's okay. There may be a slight logistical handover here while Greg, Professor Stoller, Senior Lecturer Stoller from BU will take over and say a few words about the process that we've gone through, and then we'll talk about some other factors. Thank you.
Great. Thank you very much, Simon. Once again, thank you to my colleagues at the Build Lab, particularly Ian Masheter, who was contacted by Simon Glass almost a year ago. And thanks to that introduction, we are where we are today. Before we go to the panelists, my phone has been blowing up. VC did start in Boston with Georges Doriot, who later became a professor at HBS, hence the Baker Library picture, as well as Peter Brook. So that's why we wanted to pay homage to our colleagues across the river. Thank you. We have assembled a VC panel with also some local attorneys. Quickly, I want to have Charley Lax, Caleb Winder, and Rich Hesp introduce themselves for a minute apiece. Then I've developed 4 different questions I'm going to ask the panelists. And then we've already received a number of questions from our attendees. And we can confirm there are over 350 people logged on now from literally across the world. Rich, why don't we start with you? You are an attorney who specializes in venture-backed companies and funds as well. Please introduce yourself.
No, thank you, Greg. Much appreciated. Yeah, I'm a corporate partner with the law firm of Gunderson Dettmer. Started my career out in Silicon Valley. Been with the firm for 24 years. Moved to the Boston area to help start the Boston office in 1999. As a law firm, we have about just over 270 attorneys located in the United States, Southeast Asia, also South America as well, and Beijing. And for the last 6 years, PitchBook has labeled us as the most active VC law firm globally, doing frankly more venture financing transactions than any other law firm out there. We also, at any time, our portfolio was roughly, say, just over about 2,500 companies, venture-backed or growth-backed, and also public companies. And also approximately between 450 and 500 venture capital funds with whom we work as formation counsel. So pleasure to be on this panel.
Great, welcome to you. Caleb Winder and I go way back from my Boston College days, literally over 10 years. He's been a very good friend, very supportive of my classes, was a guest on one of my original TV episodes. Caleb, if you could introduce yourself, please. Caleb, you're on mute.
Caleb Winder, I'm a managing director at Memorial Care Innovation Fund. I'm also a general partner at the Excel Venture Management firm here in Boston. I live in Boston, and I'm focused predominantly on healthcare, IT, and digital health companies. We tend to invest in Series B and later stage companies. As Greg mentioned, I got my MBA from Babson a few years ago at this point, and have been in venture basically ever since, so nearly 20 years.
Thank you. We won't hold that against you. Charley Lax has become a close friend over the past 3 or 4 years. As a BU alum, he has done a number of things to support our university, from the athletic department, obviously, to the business school. Charley has also been a mentor to several of our undergraduate and graduate teams that compete in venture capital competitions quite successfully, I might add. Charley, we'll have you introduce yourself, and then I will ask you our first question, please.
Thank you, Greg, and welcome everybody to Boston virtually. I am a Terrier, an alum, and very proud of my affiliation with BU, and very much involved with a lot of different things at Boston University. I'm not as old as George Adorio or Peter Brook, but I am above ground, and I'm still investing. And our activity here in Boston with Grand Bank's Capital, which was a spin out of my venture capital activities at SoftBank, which I started some nearly 30 years ago at this point, is focused primarily on investing in early stage companies on the East Coast. Most of our companies are either Boston or up in early investments in Canada, Toronto, Montreal, and once in a while we're not looking, our companies in the middle of the night escape over Simon to London, where we've had some great successes with some companies over there. We're a Series A investor. About 86% of our investments are where we're really the first professional money going into the companies. And we really focus and have specialized on serial entrepreneurs. We're really what we call mature capital. And this gets into a little bit of what the differences are between venture capital firms. Really the kind of support that an entrepreneur is looking for besides just investment capital. And that's something we really pride ourselves with, because we work with our companies, whether they be horses or prospective unicorns. And I actually have a slide that
Yes, I'm going to tee up that
later.
slide for you in a second. I might add, by the way, that based on my research for today, horses can outrun unicorns. So I'll back a horse anytime I can. My screen has been disabled, Simon, from screen sharing. As a panelist, perhaps you can pull it up locally, but Charley's been nice enough to actually prepare a slide for today. So I don't know if David can pull that up in the interim. Charley, I will ask you our first question while they're pulling up that slide. After hearing the students' report, how are Boston VCs and private equity executives and entrepreneurs positioned locally as well as regionally and globally from the greater Boston area?
Well, we started out focusing on, I'm talking about the Boston area, focusing on technology-based software companies. And we've really become a very significant life sciences hub, and Caleb can speak to that much more specifically. But some of the solution sets for what we're going to have with this COVID-19 virus comes all out of Boston. And we're very proud of that kind of work that's happening here. We don't invest in pharma or life science companies, but that's been terrific. And as they mentioned earlier, with the dozens of universities and colleges in the greater Boston area, our hospitals, which I would argue, along with Philadelphia, are the best in the world in terms of university-based hospitals, you've got a great basis to be able to start these pharma companies. But that's not where all of our unicorns or all of our successful companies come. We have successful furniture companies with Wayfair. We have successful gaming companies. One of my former partners was the major investor in Wayfair, and another one was the major investor in DraftKings. So there's a lot of activity. We've been investing quite a bit in mobile. This is a hotbed for investments in mobile. But generally speaking, the reason why Boston has been a strong economy, my parents went to school here about 150 years ago, is the universities. The universities generate 250,000 students graduating every single year, and that has been really the energy, the funding, and the resources that our companies thrive on. So when you're really looking to scale companies, we've had the luck of having one company blow out this year in terms of scale, you really need to have an educated workforce. And much more importantly, to scale companies, you need to have an experienced workforce. And that's what we really have here in Boston. And it's great for early stage. I think it's been great for life sciences, as we've seen, and as the world will see shortly when these vaccines come to market and help solve the pandemic over the next 12 to 24 months. And also with respect to just scaling companies on a worldwide basis. Last point on Boston is Boston and New York are actually extremely well located for managing investments that have any kind of touch points to Europe or even to Israel. And I've had success with companies in Europe and in Israel, and it's very, very difficult to manage those investments from California. So being geographic in Boston or New York, it's a great advantage when you've got in making early stage investments there.
Charlie, we have your slide loaded up in 30 seconds or so, just so I can get on to our other panelists. And I also know our executive director at Innovate also has his hand raised. Could you quickly brief us on your slide entitled US VC exits are predominantly below 100 million?
Yeah, if you can get to that read only button up here and make this larger, you can see. But basically what you're seeing is over the past 8 years, 50% of North American venture-backed exits have been below $100 million. And what entrepreneurs want to have is help growing their businesses. They don't want somebody just to write a check, be a flyby VC, and then move on. And the reality is most companies that venture investors invest in don't exit at all. They hit the wall or they get merged out. The reality is if you take a look at this, just in 2020, year to date, you've had 192 exit transactions, and about half of all transactions over the last 8 years are below $100 million, which basically says, you're not going to be a unicorn. Hopefully you're going to be a fast horse. And for the early stage venture capitalist or angel, you've got to get in early. You got to get in real early, and you got to get in below $10 million value in terms of trying to make a generational return.
Thank you very much, Charlie. That was very informative ×2, and thanks for developing the slide. Rich, my next question is for you, what does Boston offer to entrepreneurs, investors, and limited partners? In short, why Boston as opposed to somewhere else, please? Rich, you're on mute.
Thanks, Greg. Great question. I think elements of what Charlie was just mentioning, I think definitely come to mind. I think the ecosystem of Boston maybe probably starting with the universities and the talent coming out of the universities from great institutions like BU, BC, Harvard, MIT. Looking at the tech side and maybe hard tech or deep tech, the amount of engineering talent coming out of those institutions, both from younger students to professors to doctoral candidates to postdocs, et cetera. The ability, I think, of folks in the Boston area to actually develop and build incredibly challenging projects. I think it's something where the city and the whole area, the greater New England area, should take a lot of pride in. Also to echo Charlie, I think its location on the East Coast, slightly lower cost of living than New York. Unfortunately, maybe slightly colder weather, but as a location for companies, it's just, I think, a fantastic place. I think the other thing as well is like with Charlie and Caleb, very experienced venture capitalists who are used to mentoring teams, assisting teams, bringing them forward. And so I think the ecosystem as a whole, that combination of academics, investment professionals, service providers, consultants, advisors like myself, definitely I think it gives a platform and a great launching point for the companies as they're moving forward. On the life science side, they're just the expertise and the number of life science companies either starting here or frankly moving from other regions around the world to Cambridge and Waltham and Lexington and Concord. Again, the ecosystem of support, that is definitely a beacon which is bringing folks as well.
Great, thank you very much. Caleb, the next question goes to you. Outside of your traditional networks, how do you currently source deals? The reason I'm asking is Qodeo has a very unique third-party solution they developed to not only improve the quality of the match, but also in theory to lead to better returns. So my question is, traditionally, how have you sourced deals, and what are your thoughts on a unique third-party solution such as Qodeo or their competitors? You're on mute, Caleb. You're still on mute.
Yeah.
Yeah, you're good.
So at the Innovation Fund, we spend a lot of time talking to the healthcare system that I represent, Memorial Care out in Southern California. And we look at the problems that they want to solve first and foremost. And then we talk to our other colleagues that are either strategic venture groups affiliated with hospitals or just friends at groups like Partners here in Boston or MGB as they're known today. And we then identify sort of a hunting list, if you will, a target list of themes that we want to go after. And from there, we go to trade shows, we talk to our friends and colleagues, and we try to identify the companies in that space, which would be appropriate for an investment from us, the right stage, or sort of Series B and later. We've done Series B through E, and I think we just had a Series G in Olive, the new unicorn that got announced yesterday. But then so that's pretty much how we source it. We do get pitched by a lot of groups. PitchBook is one of the competitors here in the market. But just as Simon had said, it's just extremely expensive. So we don't subscribe to PitchBook. We don't pay for any of that because we can either get the information through our friends. We have enough deal flow and experience in the market that the value proposition of trying to tell me what Series B healthcare companies are worth just doesn't really fly. Half the information in there is completely inaccurate. Somebody was just telling me, "Oh, I heard you sold that investment," which is completely untrue. So I don't, it's interesting, but I'm actually quite curious after hearing Simon's, little pitch to learn more, because at $9.95 per user per month, that's a no-brainer for me if it has anything of value. I'm actually excited to learn more. But mostly, like I said, we're a bit more proactive, and people come to us that we've invested in the past. That's more the traditional way that we do it. We tend not to, the cold call into us doesn't really help very much. Tends to very quickly, get to the bottom of the inbox and never to be resurfaced. I try to respond to everybody, but I get so much inbound email, I can't even.
You can't even fathom it.
Respond to everybody.
Good, thank you, Charlie.
Greg, I want to give my 2 cents on data, which is, we do subscribe to a number of the various different services, and it's helpful not so much making the investment, but managing the investment. One of the things that I often talk about with our entrepreneurs is driving into the path of liquidity, and you really have to, as I tell everybody, and a lot of my colleagues disagree with me. They're wrong. I'm right. All companies are sold, not bought. All companies are sold, not bought. And you can't put companies into the pathway of liquidity unless you know who the prospective buyers are. For me, a lot of this data that I look at, that I enjoy looking at, helps us find out more and more about who the prospective buyers of our companies are. Unicorns have an opportunity to visit the public markets or through combinations with a SPAC. But you have to be $100 million plus revenue in order to be able to visit the public markets today, in order to get a multi-billion-dollar market value. And most companies aren't going to be that way. And as the slide I just showed you a little bit earlier, if you're looking at exiting between 50 and $500 million, you're really going to be on a pathway to sell the business to a much, much larger company. And that's where a lot of these data sets have been really, really helpful to us over the years. We really like to be able to track the prospective companies, build those relationships, and really walk into with knowledge. And I'm not familiar with Simon's platform, but I'll tell you, just like Caleb, I get hundreds of emails a day, and I can't tell you, and I'm sorry, Caleb, I'm not sending you all the life science deals I should be sending to you, but I get probably 2 or 3 dozen life science deals a day. And if you take a look at our website or you take a look at my history, you can see that the only life science I believe in is what's over Caleb's left shoulder, and also the cigars I smoke. So the reality is that, we don't do that. That's not what we do. Caleb focuses on that. I should be sending all that deal flow to him. But for entrepreneurs to be trying to impress me with their latest pharma company or medical device company, it's a waste of their time and certainly a waste of mine, because we're not going to look at it.
Thank you. We've received a number of questions from the audience. Rich, I'll send this next one to you if you want to take
But just-
yourself off mute.
I just
Sure,
want to
go ahead, Caleb.
just want to correct one thing. I'm not making life science investments at this time. The Memorial Care Innovation Fund specifically does not invest in biopharma. But I do have a fair amount of experience, so I can comment on it.
No problem. Rich, one of the audience questions is directed towards you. What are you seeing with respect to your clients about their appetite for pre-revenue companies versus post-revenue companies or existing revenue companies as it relates to investability?
Well, to some extent, I mean, it's definitely, I think, an appetite. I think the market, other than, say, end of March, beginning of April of 2020, where I think things took a pause, a halt to some extent, as I think folks were looking at the lay of the land of how COVID was affecting things. I think there are funds at the early stage, investing with the vision, the story, a founding team, looking at a founding team to think, is this the best team for this idea? Is this a team which will beat other teams trying to get this thing to market the quickest or get to revenue, to commercialization? So I think, it definitely, I think, depends on the particular investor, the particular fund, and how it fits into their investment strategy, whether early stage versus late stage. Of course, obviously, those who are targeting late stage, then increasingly the financials will become more and more important to see how the team, how the product is actually, how the sales team, et cetera, is actually, what type of traction and how well they're performing. So,
thank you. Charlie, this next question is for you. A number of audience members have said, could you compare and contrast returns from Boston-based investments versus our brethren in California? Yes, the deals are different, but at the end of the day, what are the returns like?
Yeah, I don't have that data in my head. I know that there are about 3 or 4 data sources that do. I look at sector-specific returns rather than geographic returns. I think if you're looking at the multi-billion-dollar, more unicorns are probably out in the Valley than arguably here, even if you include all the pharma companies. That would ultimately look at the kinds of returns that a lot of the geography has out there. But I had partnerships out there. That's how we started our early stage venture capital activity at SoftBank. I always tell people when I created Grand Banks Capital, I personally bankrupted United Airlines because I stopped flying out to the West Coast every other week. And so we did a lot of investments out there, and the kinds of investments my colleagues and my partners and former partners are doing are terrific. There's lots of other areas in this country that are very strong. Colorado is very, very strong, not even talking about the cannabis industry, which, by the way, is really pretty strong here in Boston area, or rather in Massachusetts. But Texas is blowing doors right now. And if you're taking a look at all the large companies that are leaving in droves, I mean, you probably can't get a moving truck right now out of Silicon Valley. Charles Schwab has left. Hewlett Packard just announced this morning that they're leaving. They started in a garage in Palo Alto. They're leaving and going to Texas. Everybody's leaving because they don't like those taxes. And Massachusetts, I'm afraid, might go down that same path. We certainly have seen that in Connecticut and New York. Great towns, great universities, great ecosystems. But when the tax and spend politicians want to keep raising taxes, you're going to end up having a brain drain, which is what's probably going to start happening in California.
Thank you. We have time for one last question before I turn things back over to Simon. Caleb, this one is for you if you want to take yourself off of mute. The question is, are you concerned what could happen after we revert to the new normal, especially in the areas of telehealth or education technology? The question is now the time to invest, strike while the iron is hot, or would you recommend keeping the powder dry and waiting to see if COVID goes away?
No, that's an excellent question, Greg. It's a question that we ask each other in the healthcare VC community. And I'll just say that what we have chosen to do at Memorial Care is not to focus on COVID impacted opportunities. So I think that right now telemedicine is huge, and I don't think telemedicine is going to go back to where it was in 2019. once the vaccine is well distributed. But I don't think it's going to stay where it is today. There's a lot of reasons for that. One is the quality of care via telemedicine is not the same. And that's why insurance companies have historically paid less for it. They also don't want to have unfettered access to, easy access to healthcare. They want it to there be some barrier. That's why the rise of all the copays, right, over the last 20 years, right? So the answer is, I would say that we are going to stick to our sort of fundamentals and avoid things that are showing extraordinary growth over the last 6-9 months, and we'll probably do so through this year. But it's really through 21. But we look at 22, and Simon mentioned the average holding time is something like 7 years, right? So we're not any investment we're going to make today. We're not planning on exiting in the next 1 to 2 years, which we think would be so it'd be a great opportunity to sell right now if you just posted 150%, 200, 300% year-over-year growth, right? That's a big driver of exit values. People, your historical and people's future expected assessment of your growth. So
thank you. We actually do have time for one more question. Charlie, I'll send this one to you. Has your funnel remained consistent during the pandemic? Would you not entertain a unique or quote unquote odd investment opportunity, which is international? What are your thoughts on that, whether including Europe or Asia or not?
Well, two different questions. Our funnel's been very strong, but I'll have to say that we have not been writing checks because as an early stage investor, we really want to spend quality time looking at the opportunity with the entrepreneurs face to face. And COVID just hasn't presented that opportunity. But we have a very specific focus that we have sold to our limited partners. They know what we're focused on, and it's early stage investments where we can get to these opportunities with one flight. And so we're not going to look at early stage investments outside of an area that we can actually get to and get home at night and sleep in our own beds. And right now, unfortunately, all we're doing is sleeping in our own beds because of COVID.
We have time for one more question. I've been told, Caleb, I will have you conclude the panel with this one. For companies that don't have a traditional product solution framework, that something is a technology and source of a product, et cetera, this particular question is talking about game development studios. How would you recommend people get to you or they get to investors in order to get an opportunity to pitch, please?
Yeah, so the early stage companies really need to find a way to get to me or Charlie through somebody that knows them well and knows us well. Somebody that it's not an uncle, it's not a cousin, it's not a classmate. It's somebody that that has worked with you and can vouch for your intellect, your passion, your dedication, and that person also has to know me well or my partner well, right? So we just, this is a marriage. It is not a date. We are not transactionally oriented. We are making a long-term bet, and we want to make sure that those people are very well respected and known by people that we can trust to give us very accurate information.
Thank you. I see a lot of other questions in the chat. Unfortunately, we're out of time. Huge thank you to Malav Sukhadia, David Landesman, Caleb Winder, Richard Hesp, Charley Lax. Obviously, none of us would be here without Simon Glass and his team giving us this opportunity. Thank you again for a very unique 6 months. I personally learned a ton. Nice mask, Charlie, with the BU logo. Thanks for staying on brand. Simon Glass, CEO of Qodeo, I will turn things back to you.
Thank you very much, Greg, and thanks very much to the panelists. Fantastic insights from both Charlie and Caleb. And obviously you Greg, you're a TV host obviously already, so we were lucky to have you without a fee today, but we'll see if you send me a bill in the post. I want to thank everybody for their insights. I think one of the things I want to pick up on there, one of those last questions, was people say how they get opportunities to be viewed. Well, the whole point of Qodeo, from entrepreneurs' perspective, is to create a shortlist that effectively they can then focus their fundraising activities on, rather than bombarding VC and PE firms with the wrong opportunities, as Charlie had said. And we see there are like three forms of ways of approaching folks. There's through a trusted network, as was just being discussed beforehand. So if you know somebody directly, the problem with that tends to be that often VCs, and I've worked in VC prior to founding this business, VCs tend to work within an hour's travel, whatever it might be from their location, as Charlie just said, or an orbit, and you tend to work with people you know. And often when people get deal flow through sources they know, sometimes returns can be lower than they could be otherwise, because they miss opportunities through networks they wouldn't intersect with otherwise. A lot of backgrounds of VC and PE professionals, GPs, as they're called, often come through consulting, through investment banking, through technology, those kind of areas, not areas always best known for networking. And for communities of diverse or other sort of similar communities, as was being mentioned earlier on the presentation, very difficult for those folks if you're in upstate Massachusetts, if you're in Vermont, if you're in middle of America, in rural America, trying to raise funding for a perfectly valid business. Your business may be valued at a lower valuation, with great IP and great opportunity behind it, but wouldn't know where to even start. So an agnostic platform like ourselves, particularly in the era of COVID, helps create what we call an indirect trusted network, which is basically by being graded and scored and only being put in front of VCs when we think it's applicable, then that ensures that those entrepreneurs will make contact at the right time and won't bother people either that they could be funded by later, and actually now is the wrong time to approach those VCs because it might be a stage or timing issue, or otherwise waste their time on talking with the wrong folks. One of the slides that we presented at the beginning, I didn't use a phrase, but in Europe, in England, we often use a phrase, kissing frogs. And kissing frogs doesn't mean, it's nothing to do with Brexit. It's to do with talking to the wrong people, talking the wrong princes effectively, or princesses, and missing out on who you actually ought to be talking to. And like with dating, we hope people learn a few lessons from their war stories of the past, and very similarly, we can kind of try and codify that through algorithms and make sure that we try to put you forward with a smart match. We're not effectively, the similarity between Qodeo and the matchings of dating industry is that we're more like not like a Tinder so much as putting anybody in forward of anybody. Some to very basic things. There's more of an eHarmony type approach in terms of trying to actually filter who you're meant to be talking to in the first place, then obviously go and consummate it later. So we're there to help the VC and PE firms filter the inbound noise, and they can see whatever they want to on the platform, and they can look into and search for both other VC and PE firms and entrepreneurs locally, globally, etc. And the entrepreneurs can do likewise, subject to people's preferences and visibility settings, as we call them, on our platform. And yet at the same time try to focus inbound deal flow. So both by broadening the net, actually in some ways, and at the same point narrowing it down subsequently, we can actually help try and deliver the right matches on either side. It's effectively a supply and demand. It's a kind of both sides have to marry up, and everybody should be in it for win-win. When I used to work in venture capital, people used to describe venture capital as a vulture capital. It's quite the opposite in most cases. VC is best done and PE best done when it's value add and smart funding, smart money, as we call it. And hopefully we can see what the requirements and attributes are of the entrepreneur as they onboard in our system, and vice versa with the VCs to create those best matches. So I just want to, again, thank everybody, all the panelists today and all the attendees today, of course. We've had a number of attendees from around the world, and thank you all the people who've asked questions. We're happy to field questions afterwards. Our generic email address is team@qodeo.com. So it's team@qodeo.com, and we can then try and funnel any questions you might have. And just to remind everybody today, if you're an entrepreneur who's been on the webinar today, use part 2, PART number 2, at the checkout to get 2 months free, valued at either $20 or $40 or pounds or euros, Swiss francs, where it might be, as you onboard. And if you're a VC, we have other offers to let you know about, and for BU staff, alumni, and students, we have some other programs we can offer you as well. So we'd like to thank the BU team in particular. It's been a really fantastic collaboration this year, and we're delighted to light up Boston as a market, both for entrepreneurs and VCs, to bring in investment into Boston, to bring entrepreneurs into Boston, and to grow entrepreneurial benefit and entrepreneurial returns in the Boston community. So I'd like to thank everybody at this stage and thank all the attendees. And we'll send you your reports and possibly a copy of the presentation later if you'd like as well. Many thanks.